Not Haiti, Tahiti. Number one day is Thursday, October 30th, 2025. This is the week in charts. I want to thank all you guys and girls for attending today. I appreciate you taking time out of your busy schedules to be here. So, what are we talking about? Well, current market conditions. I have a lot to say about that. Your questions on trading, your favorite stock, and crypto picks, you can go ahead and punch them in now. I want to continue to focus on the missing piece, and I think that needs to be the focus for a while. And the good thing about that is a lot of money management, psychology, and a host of other topics, a bunch of other topics, all tend to come out of that type of discussion because you're able to see the actual trades. You're able to see it before I recommend them. You're able to see them once I'm in them, and then you're able to see them when they finally, not if, stop out. So I think it's just a really cool thing. And as I said 1,000 times, and I'll probably say it again when I get to the slides, I wish somebody would have shown me this missing piece, so to speak. Like, show me that you're actually doing this. Show me how you're doing this. Don't cherry pick some trade where you made 1,000% and go, look at me, I'm all great and all. Show me everything, okay? Let's get into the weeds with this. I want to talk about when I suck and when I don't. Got a little kind of a nasty gram a while back. I get them every now and then. Questions and answers. Just feel free to punch in your questions now. If you were looking for the YouTube feed, they changed the freaking software again, so I have no idea how to broadcast it out. If somebody's watching this and understands how or knows how, just tell me and I'll turn it on as soon as I can. But for now, it looks like it's not going to work. As a disclaimer screen, as you know, you can lose money trading. Horizontal to sum it up, all predictions about the future and a lot of stuff can happen between now and then. That's from Greg Morris. There's my contact information once again. Obviously, feel free to shoot a screenshot. You could also reach me at daviddavelandry.com. So as I alluded to a second ago, early in my trading career, and like everyone, I had some success and did really well, printed money for a while, and then kind of lost money, then grinded it out, and just tried to discover how this thing works and learn how to trade. And although I was fairly successful, I had a few big trades, which you might argue were probably a little too risky given my small account sizes at the time. But they were able to keep me alive for a while, so to speak. And then somewhere in that process, I was blessed to be able to work with a hedge fund and to also work fairly specifically with one trader, but actually I worked with more than one. But there was one trader in particular where I was actually able to see him pick stocks, and then I eventually began to help him pick stocks. And then at some point I was sort of ghostwriting, filling in for him. And during the process, learning how to read the charts and seeing him actually make the trades and make money doing this. And then, as I've said over the past several weeks, seeing him get better at it over like a 6-month time period is like, wait a minute, this guy's been at it forever, and now he's getting better at it. And that was just kind of like mind-boggling that you could be in this game for 20 years or however long he was in it, and then get better over the next 6 months. So that was just kind of fascinating. So I want to go back in time, and that's with everything I do. And I know I say this each week, but somebody new might be watching. With everything I do, I think about the me, I guess it's now 30 years ago, who was struggling. And believe me, we still struggle. No matter how long you've been at this, there's still struggles. There's still ups, there's still downs. There's plenty of them, okay? And as you'll see in a few minutes, some of you guys remind me when I suck. But it all goes with the territory. But anyway, you feel kind of abnormal because you feel kind of lonely, you feel kind of stupid, and all these other emotions. And when things go really well, especially early on in your trading, you get a little egotistical. If I'm having a huge up day, you probably won't know it, okay? If I'm having a medium down day, you'll probably know it. I don't get that excited anymore in the up days because I know that the bad times come with it. Don't get me wrong, I get a little excited, but I realize that if we're in something that's going straight up, like one or two did recently, I know that that's not sustainable longer term, but I'm obviously happy that it's happening. Anyway, you become I think what I'm trying to say here is you become a little tempered over time with everything. In fact, you have to become a little tempered with everything. Otherwise, it'll go to your head. That's one thing I was thinking about earlier before I was going live, how the instant success can really screw you up. And that's something that I'm working on. There's a lot of content I've been working on behind the scenes for years. And that's one thing I'm working on too, is that early success or failure has nothing to do with your longer term success. In fact, the clients that I get or acquire, however you want to look at it, or come in, whatever, during choppy market periods, and they tough it out, they become my long-term clients, and they get it, and they become successful in their own trading, and doing their own analysis and everything else, and they keep me on staff to help them find setups too, when they don't care to look for setups like in choppy markets, or if they're busy doing other things. Anyway, it's great that these clients were able to stick through these tough times. The ones that come in during good times, they don't know what hit them when something finally does hit them. And I've known people who've gone broke. I've known people who ended up homeless and dead. That's funny, but these are the people that had tremendous early on success. They hit the cycle just right, and we're going to look at those cycles in just 1 second. Anyway, right now, spoiler alert, we're in one of those good cycles. I hate to use the word hope. Hopefully it lasts forever. I know that it won't. Anyway, this is a mystery chart from recently, last week's mystery chart, I do believe. It was in a gradual uptrend and then began to accelerate higher. One thing I was looking at before I went live is this thing trades really cleanly for a crypto stock. Usually crypto stocks are all over the place, and maybe we're getting to that all over the place phase now. But anyway, nice little pullback to the moving average. That's what I call a Landry light pullback. Landry light, I know I'd say each week, but somebody's going to ask me, is lows greater than moving average? Each day it's above the moving average, you add +1. And that's this little histogram down here. It helps you to recognize what's happening in the chart. Anyway, nice little pullback to the moving average. And let's see where it is. Let's see if I have the parameters coming up. Yeah, okay. Entry, stop, and initial profit target. Now, what this one did, and I'm going to flash this out in just 1 second, but notice that it triggered on this opening gap reversal. So I didn't take the trade. Now, what I will do, and I forget which one it was. I think it was ATAI or ADCL. We'll look at both of them. I'll figure it out then. But what I did on those trades is there was a somewhat similar type of situation, and I didn't take the initial trade, but when it began to break out later on, I went ahead and took the trade. Now, what I do, any trade I recommend, I will personally take myself, but I will put a little discretion on it. For instance, there's one I'll show you in 1 second, CIFR. Technically, it hit the mechanical stop. I'm making little air quotes. But I'm still in it because it really didn't go too far past the stop, and it also found a little support that began to rally again. So I'll flesh that out in just 1 second. But I do take the trades I recommend. I would never recommend you do anything that I won't personally do. And some people say I'm too selective to a fault, but there's times when you need to be too selective, and that'll make sense in 1 second anyway. Anyway, I did want to show you this, and on this day here, I'd recommend this stock when it pulled back to moving average back here, okay? And it took off, but it didn't quite hit the entry. Now, there are times, and maybe now would be one of those times when the market's doing really well, you could possibly front run a little bit, maybe get in a little bit early. And I'm going to discuss that a little bit in IPOs in just 1 second. But if you're waiting for that entry, as I'm forced to do, because I won't front run setups that I recommend. And anyway, when you have a strong close like that, Larry Connors did a lot of research back in the day. He used to publish this little professional traders journal, which was only a few pages thick, on nice little glossy paper, go out, I think once a month or whatever, once a quarter. And it was really cool. He always gave you some patterns, some setups, some thoughts. And one of the discoveries in that was that when a market closes strongly, there's a high percentage chance of follow through on the open of the next day, but there's no longer term edge to that, or there's no edge after that. Okay. So there's a high probability of initial follow through, but no edge after that. So he had a short term type of system where you would bind to close. Now, I'm not a fan of that in and of itself because that's very dangerous. It has the potential, not to take anything away from Larry, because Larry's done some amazing things, including that, but it has the potential for the old commodity adage, eat like a bird, shit like an elephant, because you have a high probability of making money on the next open. But if the stock gets whacked 10 points on the next open, then you're going to give up all those little pieces you made and then some. So I'm not a huge fan of pure short-term trading, but I do believe that there's a hybrid type approach. Now, getting back to Connor's type of research, there is a use for that stuff. Okay. I wouldn't trade it directly, but any little edge you can learn in the markets helps to make you a better trader, a better person as far as trading is concerned a little bit. Probably a better person in life because you're going to be more successful and you won't be such an a-hole in your outside of trading. And I do, like on big down days, I will text my wife. I had one of the biggest down days. I think I lost more that one day than, well, I don't want to tell you how much I lost, but it comes with territory, though. It was just a normal day for once you get into a volatile market like this. And I've since made it back over the next couple of days. But it was like a really ugly day. And I texted my wife, hey, watch out, be careful when you come home. And, women tend to be like, what's wrong? Is it me? Is it me? It's like, no, it's not you. Look at the markets. Anyway, so it happens and it comes with territory. So where was I going with that? Just knowing that these little edges in there can really help you out. So we have an entry that's right above this high. My ADD kicked in. I wasn't sure where I was going with that. Anyway, and there's a pretty damn good chance that this stock is going to trigger the next day, but we don't know if it's going to follow through, just like Connor said. And lo and behold, and I mentioned this to my peeps, okay? I told them, be careful because watch if this thing doesn't open a gap reversal on you. And it did exactly that. It ticked up just a little bit. Now, by the way, this is a daily chart, okay, that I zoomed in on. You might want to watch the daily when you're entering because that little tiny tick, and I've got it super zoomed in, right? So it won't be this big on your screen. It'll just look like a little blip up above that open. You might not even notice it. But if you're on a 1 minute chart or a tick chart or something like that, or even a 5 minute chart or a 10 minute chart, it's going to look like a big bar and you're going to want to jump in thinking that that's a gap and go type of situation. So anyway, I applied a little discretion on this. You see it came right back in. Now, I will take this trade if it begins to break out a little bit. And because I think it's still viable as a trade. And like I said, I mentioned it in the service. If anything I mentioned, I will take myself, unless there's a very obvious, in this particular case, it was an obvious discretionary call. Now, should it start coming back again, I'll take the trade. Anyway, here's a new mystery chart or another mystery chart. This one trades really cleanly again, and it's a fairly volatile stock. You can see it accelerated higher. And again, we have the nice little pullback, kind of a TKO type of move right here, this little bar here. It TKOs into the 30 EMA. And the Landry light goes to zero because the count goes to zero anytime you cross a moving average. Okay, the bar crosses the moving average. And then, unless it gaps through, then it would go to -1 on the downside. But anyway, Landry light goes to zero. And here's the parameters down below. Entry is here, stop is here, and the initial profit target, the IPT, is up here. And I'll walk you through a few of those in 1 second. Here's another mystery chart. Now, this was kind of cool because it made a minor double top. That's what I call a double top knockout. And your knockout bar would be here, but it's also a pullback, okay? And then with a knockout move, sometimes you could use your mind's eye and kind of push those bars together. So it's a knockout move over 3 days with the TKO being this bar here, but it's still a pullback. So whatever you want to call it. So don't get too caught up in schematics. But it's kind of reminiscent of a double top knockout. And a double top knockout is kind of cool because market makes a high and ideally a slightly higher high about 3 or 4 days later, maybe a week or two later, even in some cases. And this slightly higher high, again, everything I do with technical analysis as I preach has a psychological backing. So that higher high is kind of like an all clear for people. They're thinking like, okay, I've got the all clear now. I'm just going to jump in. And the market kind of sucks them in and spits them out. And getting those nervous Nellies out, sucking in some eager shorts. And this is all part of the TKO pattern too. This is just like a variation of it with that little double top in there. Really helps to push a position higher should the pullback or the TKO, whatever the case is, after that minor double top trigger. Okay. And the predicament of those aforementioned traders is what you're sort of taking advantage of. Now, that sounds kind of cruel, but this is our business, right? Anyway, pull back to moving average. Once again, Landry light pullback. The parameters are down below. Entry here, stop here, initial profit target up here, and I will follow up on those in coming weeks. As I've been saying quite a bit, because we're in this great trending market, Mr. Waddles once said, there's abundance of opportunity for the man who will go with the tide instead of trying to swim against it. Amen. Another thing I'm working on is the only way to make money, and I've said this before, so I've got bits and pieces out there already, but the only way to make money trading is to capture a trend. Okay. So even if you're a contra trend trader, a new trend better develop in the opposite direction. Otherwise, you won't make money. Like Leo Melliman once said, be a lover, not a fighter. All right, we have another smoke if you got a report. Thank goodness. You can see a nice little Landry light once again. Didn't quite pull back to the moving average, but it was a fairly substantial pullback. If you back the chart out a little bit, you can see it was a pretty decent pullback in this particular stock. Parameters down below was KYTX. Entry, protective stop, initial profit target. Now, this was one that I talked about a couple of weeks ago. It came really close in that first day. Close enough for government work, close enough because the velocity of money can only be so fast, okay? It's very hard, and percentage-wise, that was like a 20-something% move in one day. Very hard for a stock to sustain that type of move, and you're going to see that in a second with the NUAI. So on that particular day, I did take profits a little early. Again, I occasionally apply a little discretion when I think it's worthwhile. And again, knowing a few things about the markets, knowing that strong close will likely have some follow through, but no chance or there's no odds afterwards. Knowing that a market that pops up this big in one day is a gift horse. That's another thing that can be done. But fortunately, it did go on to hit that initial profit target. Now, when that occurs, I don't have the animation in here. I must have forgotten. But this stop goes to break even. Okay. And then as the trend continues to move in your favor, you begin to slowly loosen it up over time and let it widen out. And I'll show you examples of that. Here's NUAI. This was a super volatile stock, but it was very interesting. Again, you've got nice Landry light, and then you've got an orderly pullback. You have an orderly pullback. There's parameters down there. Entry is here, stop is here, initial profit target is here. Now, this one did hit it on the first day. And this is kind of a testament to why you need to pay attention. And I'm guilty as anyone sometimes of getting distracted, believe me. Squirrel. And this is where you better make sure you put some alerts in place. If you're worried about missing the whole setup altogether, put in a hard stop type of entry so you get triggered into it, so to speak. And just come up with a variety of different commitment devices. So I'll put an alert a long ways away from the entry, and then a little ways away from the entry, and then right below the entry. And that way I'll have that way my phone will start lighting up when these things move, and I'll remember to take a look at them. And I try to remember when an alert goes off to put in a new alert somewhere in between. So I'm on it. And in a lot of cases, I'll just go ahead and put in that hard stop order, okay, a stop entry order above the market for where I want to enter. Anyway, banked 1,000. Now, these numbers are based on a hypothetical 100K account. I do have what I call my model account where I mimic these trades or do whatever I say. Do whatever I say, obviously with a little bit of discretion. So you can see so far so good on this one, and we've begun to slowly trail that stop higher. We're going to loosen it up over time to adjust to the longer term volatility of the market. Also, as the price gets higher, the point moves are going to get bigger. So on a point basis, that stop is opening up too. And that's the secret sauce. Believe me, I've done lots of different things, and I always come back to something simple like that. Taking initial profits and trailing stops. That's as good as it gets. That's the best thing out there. Anyway, knock on wood. So far, so good. We're up 37.89 plus 1,000, so that's 47.89, which is almost 5% in just one position over a couple of weeks, and just outright 166% profit is pretty amazing. And if you're looking at that annualized, those numbers are just ludicrous. Even ludicrous would say that's ludicrous. Here's another one. I think it was a former mystery chart. Now, this is the one that I use a little discretion on because you can see it had that gap open and it made like a fast spike move, you know, and this is one that when I saw it, I'm like, oh, this is way above the entry or somewhat above the entry. And it began to spike. And before I could get in, it came back in. And it's like, okay, well, this is going to be avoided for now. And I don't remember exactly when I got in. I could check my notes, but it was you'll see it in 1 second. There was, I think it was one bar was started breaking out the base. I decided to go ahead and pull the trigger and get in. But anyway, you're in this trade for almost a month and you're down 190 bucks and you're thinking, why bother? Well, the reason you bother is because your stop hasn't been hit and the stock really didn't do anything bad other than trade a little sideways. So you're thinking dead money? No, just stick with the trade. Now, they don't always come back, obviously, but if one comes back and becomes one of your biggest winners of the year, that elusive outlier that we're always chasing, then it makes up for the other 10 times when it didn't, and then some. Anyway, hit the IPT, and then, it's back to consolidating again, but that's okay. It might be catching its breath to make a new wave higher. I would love if every stock just looked like that NUAI and went straight up, but I know that's not sustainable, and that would so far has been kind of hard to hold on to, but let's see what happens. In this particular case, goes up, consolidates a little bit. Everybody gets used to a certain price level, and if this thing pops to 650 or 7, whoever didn't buy it during this base is going to be inclined to buy it then, okay? And that buying could beget more buying. Remember, everything is a psychological backing, psychological basis behind it. So 17% open, 600 bucks per 100K. It's better than poke in the eye. So here's one that sort of stair steps higher, goes up, consolidates, goes up, consolidates. And that's a good thing to look for in charts, ability to trade cleanly. For the most part, it just kind of works its way higher. And the thought is when you get on board, you're getting on board for the ride, which I hate to use the word hope, but hopefully will continue. But based on your analysis of the chart, there's a good probability that will. Anyway, there were all the parameters: entries, protective stop, initial profit target. And you can see it triggers and then kind of dies out a little bit again, but it does manage to get to the initial profit target. Now, I didn't mention this on the other one, but when the initial profit target is hit, you trail your stop higher, okay, to your entry. And that way, the worst could happen, barring overnight gaps, of course, would be to scratch out on the remainder of the trade for what I call a better than the poke in the eye trade, which is a good thing because usually that happens fairly quickly. You hit that IPT fairly quickly for a swing trade, you get stopped out. Annualized, that's huge. Shorter term, you put a little money in your account, keeps the lights on, keeps you in the game, covers some or partial losses. Okay, so it's a good thing. But anyway, so far just kind of dying out again, kind of dead money, so to speak. But let's just leave the stop where it is and see what happens. And if it breaks out, we'll start trailing that stop higher once again. All right, another mystery chart update. This is from way back in May. Nice little pullback, almost to the moving average, but good looking pullback. entry, stop, IPT, respectively. Let's see what happens. It triggers an entry, and then it dies. Okay. Now that's almost 2 weeks of the trade, and you're underwater. Very hard to hold on. Okay. Dave, how do you hold on? Well, I told people, my peeps, that we have a stop at 1760 or whatever it is, and unless it hits that stop, I'm sticking with it. Unfortunately, it did rally back up, so you're about 3 weeks into trade, finally gets to break even, and then it finally hits that IPT. Again, that stop comes up to break even. Now, you will trail it a little bit. You'll trail it kind of more on a one-for-one basis. Like if it goes up 1 point, you'll raise that protector stop 1 point on a closing basis, okay? And that's more of a one-for-one. Now, I have become a little bit more lenient in more recent times on the first loaf, meaning that, let's say you got 1,000 shares on. At first, while all 1,000 shares are on, I might not trail exactly on a one-for-one basis, but that's kind of like the general rule. I might let it open up a tiny bit. But once that initial profit target is hit, and I know I'm beating a dead horse here, but once it's hit, sometimes I need to hear it again too. I've had a few clients tell me, keep beating that horse, Dave. I need to hear it. So I will. I bet you regret that. But once that initial profit target is hit, you start letting it loosen up. And the idea is to ride this thing out forever, okay? And obviously, you eventually get stopped out. But by letting it loosen up over time, again, you're adjusting to long-term volatility, you're adjusting to the price increase, and you're able to put some real money into your account when you catch a good trend like gold or defense, or I don't know if we've got any crypto ones lately, but biotechnology, whenever these sectors heat up, sometimes they stay hot for a long time, which fortunately gold did. Anyway, you can see we're fairly close to getting stopped out on here on this one, but we're just going to honor our stop. We're even. What the hell is that? We're even closer in KGC. Probably need a little water here. So there's your parameters down there. 1,000 shares. Now what's cool is when you're able to find, not that you want to go after just lower price stocks, but if you're able to find stocks that are relatively lower in price, you end up with 1,000 shares of this stock. And even after you take 500 off the initial profit target, 500 shares, as this stock gets higher and higher and higher and higher in price, that could be a substantial position. And it can be very, very, very impressive. Entries here, stop is here, initial profit target is here. Again, dead money, months and months and months and months and months. But what's fascinating here, I didn't really notice this, as I said recently, until I started doing these presentations. But in this particular case, it never went below the 30 EMA. I mean, it closed below it 1 or 2 days, but there was no Landry line. It was always kind of touching the EMA at worst. And that's actually kind of a good pattern to pay attention to. And another thing, too, is when your market sits around that EMA for a long time, maybe pay attention for a breakout. Not that you want to trade it, but you know that it might be coming because the market is kind of building that base for the launch into space, as Mr. Acaporo says. Anyway, it took a long time, but you eventually got to bank that $1,000. And then again, when that happens, that stop comes to break even, okay? Now, again, we do trail it a little bit in between, but as soon as it hits that initial profit target, your trailing stop comes immediately. You raise it immediately to break even. And then there's your trailing stop. You just kind of let it loosen up over time. So you're trading down a little bit less than a one-for-one basis. And this one came like 1 cent from getting stopped out, 1 cent from stopping out. It kind of reminds me of a long while back. I called my father and told him to short down, and I shorted down. And I had it a really tight stop at 55. And the damn thing rallied to 40, 54 and 7/8. Stocks traded at 8s back then. And had I picked up the phone, I had one of these back then, I think it was Schwab, had the first like automated quote thing. So you could just you dial a phone and you dial a few little, you dial a ticker in or whatever, and it would give you the updates. Had I called in 2 minutes later, I would have saw that it wasn't anywhere near that 55 level. So I called in my little automated deal, whatever. And I wasn't a good employee. I had, I wasn't a good employee. I had two computers at home, and I would call into one computer, and it would somehow reboot the other computer, and then get me a report on stocks, and then it consolidated whatever. When I called back in, it would I could download it or something. I don't know exactly how I figured it all out. I probably would have been a much better worker if I'd have focused on work, but how would I learn how to trade? Anyway, so nice little run here, and getting back to the story, it hit 54 and 7/8, and I called my dad. I got out, and I called my dad. Said, "Nah, I'm out. Go ahead and get out." So he got out, and then Dell went to the single digits after that. That was when they were cooking the books, and all this other stuff came to light after it topped out. We didn't know that at the time, but eventually it did. And at pretty much every family gathering over the next 20 years, my dad would be like, "Remember that Dell trade?" Yes. Anyway, not bad. 44, 80, or 61% open, and probably, hopefully not anytime soon, but in upcoming webinars, I'm sure when we stop out on some of these, I'm going to do an update, as I normally do, about how much open profits you give up. And it's okay to give up those open profits, okay? That comes with the territory. There's a lot of things that come with the territory. If you just learn that they come with the territory, it makes your life a lot easier. Believe me. Now, this is one we talked about last couple of weeks. It did stop out. I'm just going to run through it real quick. I just want to mention once again how I use a little bit of discretion on this one. So this was another one of these crypto stocks, which actually trades fairly cleanly, to my amazement. Look at the persistency in this stock. Notice that it tends to go up day after day after day, but triggers, it hits our IPT. The stop comes to break even, okay? And then it was trailed a little bit higher, and it stopped out on a mechanical basis. Now, I did stick with this, and I'll show you what I did here. So it stopped out for what I call a better than poker day trade. In fact, that's much better than poker day trade. You made 388 on the remainder, 1.3% on your entire account, or 1.4%, which isn't bad for that short period of time. Annualized, it's kind of ludicrous. Anyway, I used what I call a wiggle room stop. Okay, it's like, all right, hit the stop. Let me think about getting out. And then it really didn't go too far past where the stop was. So I gave it a little wiggle room. The other thing I noticed after the fact is that it's right around that 30 EMA. So in hindsight, I shouldn't admit this, but in hindsight, when I was adjusting the stop higher, I should have maybe accommodated for the 30 EMA. But in my defense, what I think happened is that stop likely on one of these days, probably this day here, or maybe this day here, was raised up. And at that point, the stock was a long ways away from the moving average. But yeah, one thing you can look for, markets often do find a little support around the 30, is, okay, if your stop's right at the 30, maybe put it a little bit below the 30, or let it hit that 30, see what happens, and then replace your stop with a hard stop. Okay. Letters. We do get letters. Any questions on all that? Now, this is an older letter, but I found it relevant, and I'll explain why in just one second. So, with all due respect, I have found John Ross's stock picks to be better than yours. John is our IPO guru in our Facebook trading group, Dave Landry's Trend Traders. My three biggest losses last year were all your stock picks. With 30 plus years experience looking at tens of thousands of charts, I would have thought you would be much better at this than you are. My three biggest winners last year were all my stock picks. I guess you say it all my stock picks, okay? Because I'm about to say, oh, okay, his three biggest winners were all his stock picks. Okay, that's fine. Yeah, that's great. I'm glad you're picking stocks. So these are some snippets that I took from a couple of emails, so they might not all flow together. So I said, by the way, I'm sort of encouraging John Ross to rise up as the IPO expert. I actually since then or around here, I had promoted him to expert in the group. It would be great if others did the same. He's really done well, and I'm proud of him. This obviously helps the group. And my goal is to get everybody up to speed, and then we start helping out each other, right? I mean, what if I get hit by a beer truck? You guys can take this and run with it, okay? And then I also said I'm flattered you would use John Ross as a comparison. John has done well with my IPO stuff. Now, I don't want to give myself too much credit. He actually took it and made something out of it, okay? So I was maybe helped him get started, but he took it and he did this on his own, right? So I don't want to take anything away from him. In fact, I would want to say this. He's taken the ball and run with it or ran with it. I always get those mixed up. We've spoken off the record. He's done some amazing things. He really has. And he might have actually gone public with a testimony. I don't know if he did or not somewhere, but he might have. I see the same exact setups as John during my IPO analysis. I actually wait to see if John catches them first. I'd like to see him rise up and do his own service catering to IPOs. The idea of the group is to have the John Ross become trading experts, and that's why I promoted him to group expert. So he's already been promoted at this point in time. My goal with the group is to create a trading tribe, kind of like Dakota did many, many years ago. And I went on to say that I'll be hot again when conditions improve. Now, I want to get back to the IPO thing in a minute, but before we do that, coming into 2025, what was the market doing? Nothing. It was chopping sideways. It was abysmal, okay? And notice the Landry light down here. You got a little red, you got a little green, you got none, okay? Back and forth, back and forth, back and forth. And then what happened, okay? That's bad for trend trading. And initially, when the market sells off, it can be bad for trend trading too, especially if you're long from the prior bull trend. When this market, when this market gets whacked, we're going to get whacked. We're going to give us some open profits. We're going to have some, maybe even new positions lose, and it's going to be a little ugly. It comes with territory. But if you get a fairly clean rollover at a setup like this was the first thrust, I'm guessing it was also a bow tie and some other type of transitional type of setups. That's actually good for trading, okay? So I grabbed the trades from this period, the shorts, or they were shorts, I should say. We had 3 shorts during this downturn. And you're not going to get rich on the short side, okay? Maybe in an extended bear market, but it's hard, okay? The retrace rallies suck, okay? But anyway, in spite of the market dropping like a stone, I'm kind of proud that we were able to make money, okay? I think it was Gary Colbaum once said, give me an uptrend, give me a downtrend, or give me a ticket to Tahiti. Not Haiti, Tahiti. Anyway, so you've got a little retrace. At first, it looks like we're going to get a new leg down. It fakes out to the downside, and then it starts going up. So that initial fake out to the downside is bad for trading. That sharp retrace, that probably knocked us out of almost all of those shorts. I think all but one at the time. And then it starts to roll over again. It's like, aha, let's start shorting again. And then the market went straight back up. Now, obviously, that becomes, once that trend begins to establish, that becomes good for trading. So if you take a look at all the closed trades going back to that fantastic run, okay, and we have a few open trades that go back even further, but the closed trades, we had one loser in there. Okay, it happens. But that was a pretty good run, 7.7637 in closed trades per 100K. And then this is a portfolio snapshot. I think I took it yesterday or day before, and the open portfolio is up 18K, okay? Now, when the market's going sideways like this, I start getting the you suck emails. And I do suck, right? When the market's going sideways like that. But what you're going to find is I recommend fewer and fewer and fewer setups, and I begin to bore you to death. And you begin to think, why do I need this guy? Well, you need this guy because that market might sell off hard, or it might take off in the mother of all trends, and you're going to want to be on board for that. Anyway, so down here where you get that fake little retrace up, it looks like it's going to go right back down. That's another one of those you suck situations. So as we say in the South, the sun doesn't shine the same dog's ass every day. Stick around long enough for when I don't suck, So as I alluded to earlier, people that come in when things are good, they think it's always going to be that way, and they tend to do the worst longer term. People come in, if you come in doing a choppy market and you're like, well, Big Dave sucks. Well, Big Dave does suck, okay, when the market is just going straight sideways. But the trend following moron stuff does eventually kick in, and you will absolutely print money. You have to make hay while the sun shines, okay? So I come in every day and I feel blessed. We're doing great. We're doing fantastic. I know it's going to come to an end. So my expectations, especially this time, okay, it's like each time you just think you're God, you know. But this time I'm actually purposely and mindfully, however you want to look at it, saying, okay, Dave, you know it's not gonna last forever. It might, okay, it might last another 2 years, right? If it does, you might not see my fat ass again. We'll see. We'll see. No, I want to build my trading tribe. I want to get the group together. Charlie Kirk, not the political Charlie Kirk, but the other Charlie Kirk, the trader Charlie Kirk. When I was attended his traders retreat, I was amazed at his clientele and how smart they were and what great traders, and that sort of inspired me to create the same thing and somehow attract this. I guess the point I'm trying to make is a compliment to him that he's attracted this amazing talent. And then when I see some of these people in the group rise up, I get very excited. So that's kind of like the idea behind the Traders Tribe. So I'll stick around even if we have 2 more years of this bull market. Anyway, getting back to John. So this is one of the IPOs he threw out recently, and this is a benefit of being in the traders group. You have to at least be a gold member of DaveLandry.com to be part of this tribe, so to speak, to steal a word from Sakota. But he threw this one out there, and I thought it was pretty interesting. So you got day 1, day 2, day 3, day 4. Now, technically, the earliest you should buy an IPO is the close of day 5. Okay. There are cases where you might get a little early, and I'll show you that in just one second. Now, the day 1 rule states that, and this is called buy at B. Like if a market's going to go from A to C, it has to go through B to get to C, right? So with the IPOs, it's a bit of a breakout type of pattern. You're actually buying that new closing high, okay? Now, back when I did the IPO course and did a lot of research, I learned that the day 1 of trading, the first day of trading, can be very significant. A lot of times, I don't know if there's anything disingenuous happening or whatever, but people might have owned it pre-IPO. There's a lot of dumping that occurs, pumping and dumping that occurs. And a lot of times, and you're going to be shocked when you go in and do this research, a lot of times that day 1 high is the all-time highs for IPOs. If you don't walk away with anything from today, never buy an IPO on the day 1, okay? Wait to see if you have some follow-through. And that'll keep you out of a lot of trouble. In fact, wait until day 5. Now, assume this day 4 high was below this day 1 high. Then the closing high, let's say the closing high was here, okay? That's not your buy. Your buy is the first close above that day 1 high. But since the day 4 did penetrate that day 1 high, but not by much, but the day 1 rule technically is no longer in effect. So you could argue that, well, that's just not enough to make a difference. But mechanically, if you were trading this pattern or setup, the fact that it violated this, the day 1 rule no longer works. Or the day 1 rule would state you'd have to close above that day 1 high. But as soon as that gets penetrated, if that happens before day 5, okay, then that rule is no longer in effect. So the buy would be any close above, let's say round number 750. Okay, it's like 745 or something. Anyway, so there's day 5. So you would buy on that close. So kudos to John, our group expert, for recommending this one or mentioned it. Now, I did front run this one by getting it a little early because the range was expanding, okay? And so I was looking for a 1-point profit. I was able to get that the next day. And you can see there's the trade down there, 600 shares. I didn't go in with huge size, okay? That's what, $6,000 margin, round numbers, some maybe even less, 5,000 margin. And so you can see that I had a limit order in, and I went ahead and put a limit order good till canceled, after hours limit order, which one brokerage is not taking them for some reason on these go-go stocks like this. I don't know why, but the other brokerage is, so that makes life a lot easier. Anyway, out half, and then the stop gets trailed higher on the remainder. Now, since it's moved so far nicely in my favor here, that 1 point stop is going to be a little bit bigger. That 1 point stop might have been a little tight going in, but I figured it's about as tight a stop as I could use and still have a shot at this. Now, let me show you why I front ran it a little bit. So we know from the prior chart that anything above 7 is a buy on close. Okay, so the stock opens like, what's that, about 7 3/4, and then it has this big pop higher. So you're getting an expansion of range. If you get an expansion of range on day 5, that's for if you're more experienced. Okay, get a few dozen of these under your belt. Okay, literally like 2 dozen of them, successful buy a B type of trades, and then look to kind of improve upon it a little bit by front running the entry just a little. Okay, so you can see that it was really expanding higher on that day. And remember, any close above 7, I think it's the number, would be a buy. So I got in a little bit early. And again, it was a range expansion on that day. So I got in at 896. And that was just above that high. Okay. So it was really taking off, and it formed that high, came in a little bit. And I said, okay, I'm going to put in a stop entry order. So if you look down here, STP, so that's a stop order above the market. Okay. And then it took off nicely. It closed at 967. Now, technically, with the buy a D pattern, you would be buying that close. And believe me, I've bought, I don't want to say hundreds, I don't know how many, but lots of IPOs, maybe hundreds, at the close of the day, like 2 minutes before the close or 1 minute before the close, or sometimes actually almost literally on the close. And that's a great thing to do, because let's say this thing spikes intraday, comes back in. If you get to close at a new closing high, you know that there was no selling, at least going into the close, and that was actually just the opposite, buying. Okay. But again, as you get a little bit more advanced, you might want to think about, especially in good markets. Okay. If the market's at all-time highs, NASDAQ at all-time highs, especially, and you're seeing these wide range bars on day 5, it might be worth a shot on some of these. All right, any questions on all that? I know I'm just kind of powering through it. So anyway, as I've been saying quite a bit, speculation is alive and well. Landry 100, I'm just buying stocks as they make brand new highs, so to speak, buying. This is not real money, okay? The service is hypothetical, but I use real money. This is just an experiment, but I am long. It's funny, as I go through, look, ATAI's right here. I'm long that one. I'm long, let's see, I'm long a few of these. Cypher, I'm still long Cypher. So it does, and look, KGC right there. It does help produce a list to watch. And I do publish this in my Facebook group, and I also publish this to my paid Substack subscribers. Anyway, all these stocks were bought at brand new highs. And look at the gains in here, okay? I just did a screenshot of the biggest gainers. Okay, so it's like 40 or 50 stocks. And they're all right around 40% or higher, okay? 550 on this gold stock here. And that had a really good run. So all bought at new closing highs. All right, let's shift gears and hop into crypto. Now, there hasn't been a lot to do in crypto lately. Wow, is that right? Is that MCTA? I said, Dave, I thought you said you didn't get excited when stuff's go up. Well, I didn't say I didn't get excited. I just try to temper my expectations on that. Yeah, not a bad day there. You need to give a shout out to John for that one for sure. Wow, nice work. So look, 1, 2, 3, 4, 5, right there. You buys on the close. And again, I front ran this one a little bit. And the fact that John mentioned it allows me to front run it. So if I would have mentioned it, I'd have had to wait for the close because otherwise I'd be front running everybody else. So that's one advantage of seeing if John picks them up too. And he catches stuff that I don't always catch. And that's why you really have to have more than one eye on the market. And then there's been many other members in there. I can think of quite a few, like Jim F. He pointed out recently a stock that triggered, and I got distracted, didn't realize it triggered. It's like, oh my goodness, it triggered. So it helps. It helps to have that support team. It really does. I'm such a nerd. My wife months ago, well, it was years ago now, she's like, that's the best thing you ever did, that Facebook group. And it normalizes you. It makes you feel good about, or maybe less bad about what you're doing. Anyway, Bitcoin, just all over the place. Nothing to do here, okay? Nothing to do at all. This thing would have to make all-time highs before I would touch it at this juncture, okay? Now, if it goes down and bottoms out for a while, then I might change my tune. But for now, leave it alone. Now, as I say ad nauseum, when the bellwether Bitcoin is doing well, sometimes you can just go in and buy the strongest shit coins, these altcoins, right? SHYT, and you'll do okay. Now is not one of those times. Although one thing that I've been lacking in, and this is why we need to promote somebody up to crypto expert in the group. I think who's in the group that does crypto a lot? Not CJ. The other John. I think there's another John that does the crypto. There's actually a couple people, so I don't want to name one and forget the others. But anyway, we need to promote you guys to a crypto expert. Ethereum's not doing so well right here at these multi-month lows. That's an ugly looking chart, okay? Do not buy Ethereum. Do not buy Bitcoin. Stay very far away for now. Let's see how it shakes out. That might be a buying opportunity, but now is not the time. Now, as I've said before, that's a little bit of an extreme example, but sometimes, especially when Bitcoin is blowing and going, you could just come in here and buy the strongest pairs. And now is not one of those times. So let me do a little analysis here, see if we can find anything. That's a stock, that's a stock, that's a stock. That's a stock we're long. Okay, let's see. Yeah, so that's one reason, like I do this analysis and I don't find anything and then I forget to keep doing it, but I need to keep doing this every day. And again, sometimes when they're running and it's amazing, and go back and watch the old presentations, and these things just absolutely take off. A lot of stocks in here look good though. Okay, any questions on that? Let me shift gears. Let's bang out the market real quick, and then we'll see if you have any questions. We can take a look at your stock picks if you want. All right, so just for S&G. So here are today's winners in the Landry 100. PRM up 25%, 17%, 15%, 13%. Okay, I'm not God. Okay, this is what a momentum list looks like in a bull market. Okay, I don't suck now, but if it gets choppy, we're a short reversal, I will. Comes with territory. Anyway, let's take a look at. I don't know what size to make this. Everything's new. All right, let's take a look at the overall market. And again, if you have any stock picks, please punch them in now, and I'll be happy to take a look at them. All right, S&P 500, not having a great day, but look at this little breakout it's recently had, okay? So that looks pretty good still. It could actually use a bit of a knockout type of move. NASDAQ composite off a little, no big whoop. That's 1%, but still, it's not that big of a deal for the NASDAQ. So far, this nice little breakout remains intact. Now, the Rusty is a bit of a bummer because it's sort of pulled back into this consolidation that it's had as of late. So I guess we could move this out a little. But it's just kind of chopping around in here. It's still remaining in an uptrend. It's just off all-time high, so we'll give it the benefit of the doubt. Ideally, though, you know me, I want to see a breakout and not look back for a while. AI, robotics and AI. There's AI. You can see looking pretty good. Longer term uptrend attack. We could see some setups here soon. There's robotics. Just pull it back a little bit. These pullbacks are going to provide a plethora of buying opportunities. Now, this is cybersecurity. It kind of stalled out. It's got a minor double top in here. And compared, especially when you compare it to the relative strength basis of other areas, you can see it's gone mostly sideways for months and months and months and months. So we need to wait for that to begin to rally before getting too excited. Metals and mining overall, especially golds, are approaching an inflection point. Now, some of the rare earths are still doing well. But you can see we did kind of take out this low a little bit, this pullback low today, but it still looks pretty good longer term. Now, gold, the commodity, keep an eye on this pullback low, okay? If that gets taken out, I would change my tune. For now, this does still look like it has potential to make at least one more push out of the pullback. But again, if that low gets taken out, especially like a GDX, and you'll notice the golds were long, the TFPM, as I showed a little while ago, our stop has been cinched up, not intentionally, because when the market was right here, the stop came up, okay? And the stop is relatively close to this low. And then KGC, it was like 1 cent below this pullback low. So that is our new inflection point. Usually if you're trading a pullback, you would give it some room below it. But we're in a longer term trend following mode, and it's pulled back to where our stop is. If it takes it out, it takes it out. So long, and thanks for all the fish is what I like to say. Broker dealer bouncing back a little bit today, but it's stuck in a range. Financials overall have just been not too great. You can see kind of a inverted cup and handle type of pattern, or a top or saucer and handle, whatever you want to call it. It just looks toppy, okay? And then if you didn't know anything about trading, you know, where is it now? 50 something. Where was it months and months and months ago? 50 something. Okay, so it hasn't done anything in a long, long time. Healthcare has been improving in general. It's still a little wide and loose. There's still some overhead supply to deal with. Retail is breaking down, so that's kind of looking ugly. Okay, and I bet if we could, I don't know if I could do it on the fly real quick. Let's see if we throw a bow tie in. Yeah, you can see it's bow tied almost to the downside. Yeah, it's bow tied to the downside. So the 10 is less than 20, 20 is less than the 30. So that's beginning to look a little questionable. There's quite a few areas out there not looking so good, like foods, for instance. Just look at that, foods just not looking so good here. But foods are more of a defensive area, so I wouldn't get too excited about that just yet. Real estate, though, break it down a little bit for this sideways base it's been stuck in, so that's a little bit questionable. Utilities, though, look at that, just pull it back. And utilities have begun to act more like momentum stocks, so that's probably AI related if I had to guess, but I'm not going to confuse issue with facts. Telecom, it's kind of has its work cut out for it. It tried to kind of rally out of pullback. It stalled out a little bit, so that's looking a little questionable. Okay, longer term, but questionable shorter term. Some of these rare earths like lithium, though, look at that. They got new highs with vigor. So within the metals, here's metals overall, metals and mining. Some areas like lithium and uranium, kind of a crazy ride there, but uranium has come back nicely too. So maybe the focus is going to be more towards the rare earths as opposed to the golds and silvers. Let me just punch in silver. Silver and gold. Not a bad day there. It's like gold. It's retraced deeply, but it is trying to rally out of the retrace. Semiconductors off a little bit today, but look at this little breakout they had. Back to chart way out. You don't have to be a rocket surgeon to see that that's going up. That's in an uptrend, right? What else? Biotech. Biotech's been doing pretty good, right at all-time highs vis-a-vis the IBB. It's gotten through all this overhead supply, and that's looking pretty good. And we've got a few biotechs in the portfolio at the minute. I think that's it. Oh, defense. Yeah, defense. Did I talk about this yet? Defense down a little today. So far, so good. You don't want to see it pull back to where it broke out from this little pullback, but overall, it still looks pretty good. So overall, things still look pretty good for the most part. So continue to look to get long with the usual caveats as I've been preaching. Make sure you're waiting for entries. Make sure you're honoring your stops, and make sure you're taking some profits along the way. Okay, Stuart wants to know about RGTI. RGTI has been on my Landry list, but I'll go ahead and talk about it. I like it. I like it a lot. Look at this accelerated uptrend in here and this pullback. Now, this is a super volatile stock, okay? But absolutely, Stuart, good eye on that one. Katos is we lost Katos not too long ago, and Katos has been in my Landry list too for a while. It still looks pretty good, okay? And this is if you go back and watch, I guess it was last week or week before. This was out so long. And thanks for all the fish example. We got a really nice trend out of this one. I got taken out of this one too. But yeah, that looks pretty good, Stuart. So good eye on that. An entry above this high, and maybe stop out down here below the low. Okay. So yeah, that still looks pretty good. That's in defense. Good job on that one. High five. These are the first 5 high fives we've had in a while in here, so that's good. That's great. All right. If you're watching on YouTube, my apologies if you tried to watch live. We'll figure out this software issue sooner or later. Okay. Any more? Any questions? While we're in impasse, I want to thank everybody for attending. I appreciate taking time out of your busy schedule. Anything unanswered, daviddavelandry.com. All you guys and girls that are here from the Facebook group, I'll see you guys in a little while. Everyone else, have a great weekend and hope to see you again next week. And of course, may the trend be with you. Thank you so much. You're welcome.